Hi, this is Jan of Ecosummit TV, and I'm standing on the roof terrace of Taylor Wessing, who have a really wonderful office in a big building in the middle of London. Behind you can see London, a favorite town, a big town, a capital, not yet a smart green capital, but they are trying very hard. And Ecosummit is helping them, and that is why we organize our first Ecosummit Lounge here in London this evening. Taylor Wessing is our host tonight, co-hosting and sponsoring the first Ecosummit Lounge in London. We expect 60 participants from the Cleantech community, including startup companies, investors, corporates and service providers. And we all have a common mindset. We believe that we should transform our economy into a smart green economy as quickly as possible. And of course, this smart green economy should be powered by 100% renewable energy. And there are quite a number of scientists and experts who believe it can be done, for example, by the year 2050. Ecosummit is the smart green business network connecting startups, investors and corporates. We do it online and offline at our conferences and events like the Ecosummit Lounge tonight. And I also want to tell you that we are cooking up something really interesting, which is called Ecosummit Market. And this is our new online platform where we want to be a useful lead generation service, helping startup companies in particular to find new employees, to find new investors, to find new customers, and to find new suppliers and partners. Thank you very much for watching Ecosummit TV. Good evening, everybody. Now is the moment where we serve you smart green content, and we need your full attention. You can still enjoy your drinks as far as I'm concerned. And we are starting now. My name is Jan. I'm your co-host tonight together with Simon Walker of Taylor Wessing. We are very excited and very happy to be here. As Bill Gates likes to say, I'm happy to be here. And in order to warm up, I want to call on stage Simon Walker. He's a partner at Taylor Wessing. We met in April in Munich at the Cleantech Forum. And I think that's when we agreed this would be a good opportunity to try something out here in London. And I have to say, you have a great location, you have a great team and a great company. And what Taylor Wessing is about, Simon is going to tell you. Please come on stage.
Thanks, Jan. I'm not sure whether I can add anything to that. Delighted to welcome you all this evening on behalf of Taylor Wessing as well as Ecosummit. As Jan said, my name's Simon Walker, I'm a partner in the firm. I co-chair the firm's climate change group, which covers a number of areas, including Cleantech, which I think is probably most relevant for this audience. We advise quite a significant number of funds across their investments in France and Germany and in the UK, and increasingly act for a lot of clean tech companies in those countries. For those who don't know Taylor Wessing, we have about 900 lawyers in over 20 offices, not only in those territories in Europe, but in the Middle East and in Asia and in China. And we're certainly seeing increased interest in the Middle East in clean tech, and as you know, a lot of interest in China, and seeing an increasing number of our Chinese clients looking to move into Europe. Delighted to be hosting this event this evening. Very much looking forward to hearing what the speakers has to say. very much looking forward to hearing Jan's pitch at the end. I won't be pitching any more this evening. I hope you have a wonderful evening. I hope you've enjoyed yourself so far and you enjoy the rest of the evening, both during these presentations and the networking afterwards. Thanks very much.
Well, good evening, everyone. I met Jan for the first time earlier in Berlin, actually, and we instantly fell in love. And I thought that is a good idea to maybe, just do this and contribute and help start launching the first Ecosummit Lounge here in London. My name is Nico Rozinski, and I'm a partner at Generation Investment Management, and I'm involved in the firm's dedicated Cleantech fund called the Climate Solutions Fund, where we invest in both private and public companies. Many of you will be familiar with Generation. Generation, as Jan said, was founded back in 2004 by David Blood and Al Gore. Now, no talk about Generation at this point would be complete without actually plugging a long-standing running joke, which many of you, I'm sure, know, that we missed the historic opportunity to name this company properly, i.e. Blood and Gore. And it's actually also a bit embarrassing, but the naming process of the firm is probably to this very day one of the more involved projects that we as a team embarked on, and we still haven't gotten it right. And I confess up front, I'm partly to blame because, as Jan said, I was part of the team when we founded the company back in 2004. So Generation today manages a little bit over $7 billion in assets under management. We invest in over 70 companies across the globe, across all industries, through two main strategies. One is our global equity strategy, where we entirely invest in large cap publicly listed companies. And second strategy is the Climate Solutions Fund, this dedicated clean tech strategy. The firm today has 55 people, of which roughly half are investment professionals, and the investment team entirely sits here in London, just off Piccadilly Circus, so it was a very short haul for me. So sustainable capitalism, well, I guess a few things conspired that led personally for me to this evening's talk here. And I want to just mention a few. So first, before becoming Vice President of the United States of America under President Bill Clinton, Al Gore published a book called Earth in Balance, and that became a bestseller in 1992, also in my home country of Germany, which I'm not sure, but it might have been the country with the actually absolute highest selling numbers of books. A few years later, a small, ambitious investment firm started off in Switzerland, boldly naming itself Sustainable Asset Management, and they would become a pioneer in the sustainability investing space and would basically define that category for years to come. And thirdly, and more prosaically, while I was still a student in the late 1990s of environmental sciences in the north of Germany, I came across the Dow Jones Sustainability Index in a slightly unusual way, because friends of my family ran a PR firm, and BMW at that time was one of their clients, and BMW, the car maker, just got included in the Dow Jones Sustainability Index and asked this PR firm to write something about it. So these friends of my family turned to this young, aspiring environmental scientist and asked him whether he had a clue about the sustainability stuff. Clearly I had not, but it inspired my imagination and sparked my interest in the field, and I guess that set me off to finance and to Generation in the end. And Generation really continues that ambition to mainstream sustainability investment to this very day. And just recently, actually just come from our advisory, just recently we published a white paper under the headline of Sustainable Capitalism. Under that headline, this white paper and we as a firm basically embark on a process to take specific actions for market reforms, for practices that we feel are barriers to maximize long-term value creation, ranging from reporting or the lack of compensation structures, misalignment of compensation structure, both on the corporate but also on the financial community side, and aspects to do with practices such as quarterly earnings guidance, which we feel leads people to very short-term action. Clearly, very quickly, we realized that we would stretch ourselves too thinly to embark on all of these areas at once and on our own. So we decided to prioritize the aspect of stranded assets under the headline of sustainable capitalism. And we understand stranded assets as assets with a value that would change dramatically under scenarios of a carbon price, a price on water or other natural resources, as well as other sustainability-induced regulations. And as I said just now, I just come out of a heated discussion in our advisory board where we debated what the way forward is here. But to maybe bring that a little bit to life, also for myself, I would like to share an anecdote with you going back in time when I was still at SAM Sustainable Asset Management, where in 2003, we, together with the World Resources Institute, or WRI, a leading environmental think tank based in Washington, D.C., embarked on a study to assess the impact of carbon constraints on the global car industry. This systematic review showed that at that time, General Motors and Ford exhibited the highest carbon intensity of profits, as we called it there, which essentially means that they had most to lose and most at stake if there were ever an increase in fuel prices or indeed a carbon tax or carbon price. At that time, in the 2003-2004 area timeline, very few people were worried about it because fuel prices were moderate, and clearly there wasn't an immediate impact on quarterly earnings, so there was no short-term effect. However, a few years later only, as fuel prices began to rise to and above the $3 per gallon mark, people started to note there was clearly a behavior shift on the consumer side, and people demanded and were looking for more fuel-efficient car models in the market. And that, to a large extent, took General Motors and Ford by surprise, who at that time still derived more than 70% of their profits from large SUVs, which were at that time not terribly fuel efficient. In contrast, Toyota saw record sales of their Prius hybrid electric vehicle. So the message here for me was that first, things like carbon constraints could actually strand assets such as manufacturing capacity for SUVs and pose a huge risk for car makers that are sitting on these assets and are not ready to act, and it needed actually very heavy retooling to get General Motors and Ford equipped for essentially the next wave of cars that was demanded. And secondly, any long-term investor or even any investor would love to have readily available data, not only for the car industry, but actually readily available data that actually shows the impact of things like carbon across the portfolio, across the industries. And a recent study by Mercer really brought that home to me, Mercer, the investment consulting firm, where they estimate that $8 trillion of investment might be at stake because the underlying assets might get stranded because of something equivalent of a carbon regulation. So this is why we're embarking today, and we're really in progress of doing that, together with partners, to help investors and companies alike to better understand what constitutes material risks to their businesses and assets. While the risk side is definitely essential and you need to assess that and more has to be done, I definitely want to conclude this talk on the opportunity side. The Climate Solutions Fund that I'm mostly involved in is a dedicated cleantech strategy that is focused on generating investment returns by investing in the public or private equity of high-quality growth stage companies that actually would benefit from the transition towards a more sustainable and lower carbon economy. We typically invest anywhere between $10 to $30 million as a minority. Currently, we have 23 companies in our portfolio that are active investments, and they come from a wide range of sectors and industries, ranging from the more unlikely ones like social media and data and software, as well as the more traditional ones such as biomass, LED, water, and renewables. So as many of you also know, it is not always at this point great and a lot of fun to be in the cleantech space, as some are actually doubting and outright questioning the investment case for cleantech. We would definitely disagree with that notion, because we feel there's a lot to be very optimistic about when we look at some of the cost curves in some of the spaces in cleantech, such as, for example, LED and PV. And maybe to flesh that out a little bit and just offer a few examples of how we invested in these spaces, maybe just would like to offer an example on the public side and on the private side of active investments of ours. We clearly see a transition towards LED based on cost curves and the like. And we have been looking at the LED space for quite some time and tended to focus on niches where we could see attractive paybacks, quick paybacks emerging. And that led us far and foremost into the industrial lighting space. And then when we invest, we tend to, as a lot of people probably would do, tend to focus on companies that have the potential to lead or even dominate their space. And that led us in the end to a company called Dialight, which is today a company that is listed on the London Stock Exchange, has over $100 million of revenue, and is solidly profitable and growing at a more than 20% revenue clip per year. And there are many other companies in the LED space that have a similar attractive profile. So we would definitely feel that this is a very attractive space to actually deploy more capital, and we continue to look for more opportunities. On the PV side, which is where I'm mostly involved in, we were very slow. So, and it was not always easy to hold back the tide. But when we started the firm in 2004, clearly PV was one of the more obvious places to look for investments. But it took us 5 years to actually make an investment in a company called SolarCity. And that was really guided by our research that led to our conviction that actually in the long term, value in the PV space will accrue in the downstream as the upstream, solar panel manufacturing and the like, would actually commoditize as system prices come down. That at the moment looks like it's playing out as we thought, and we as I said, invested a few years back in SolarCity, which stood out together with others like Sunrun and other companies as being the real innovators in this space in the US, through very interesting and smart financing solutions, such as the Solar Lease program, where you have zero upfront cash as a homeowner, but you actually save on your utility bill from the first month onwards. Today, well, coming back from really a startup, this company was founded by Lyndon and his brother Peter Rive. This is now a very serious operation, employing over 2,000 people and still very much in the growth mode. So we are quite excited about that. But again, these are just our narrow view of the world. There is our colleagues in other cleantech firms would be able to share many more of those examples. And I think by working with these and other companies, that definitely gives us the excitement to stay course here, and we hope to be committed to the cleantech space for many years to come in the long run. So with that, I would like to get out of the way for the company's pitches, especially for Jans, and would like to thank you very much.
Do you have a question for Niki? I think we have 1 or 2 minutes for questions. If anybody wants to ask a question, raise your hand and wait for me. I'm your resident microphone runner. Who has a question?
Generation invests in large cap, the main fund, the 7 billion, over the long term with a view to encouraging sustainability or because those companies are sustainable. To what extent have you looked at early stage investments for the long term? Because you seem to be playing a sort of mid-cap game with your Cleantech fund at the moment.
That question came prepared as well. Thank you for the preempting like that. So I had a lot of time to think about it. So yes, as you rightly pointed out, we are not an early stage investor, and that from the outset was not our objective. We invest anywhere between the $10 to $30 million. Our sweet spot is around 25 million as a minority stake. So that means the company needs to have a certain stage and size to be able to be eligible and to be a good fit for our investment profile here.
When we first got to know the Ecosummit organisation about 2 years ago, we came to pitch in Berlin, one of your earlier conferences, and we were indeed a startup at that stage. But we're now somewhat more grown up, and what I want to share with you is our approach to data-driven design, why we think it's important, and why this is our contribution to greening up the built environment. So what have we done in the last 2 years? We were founded in 2009. We are based in both London and New York. We're quite lucky because we have a US co-founder and a European co-founder, so we just grew up that way. It's also very helpful for us because both of those cities are real hubs for expertise in architecture and real hubs for investment in the built environment. We now have nearly 40 staff. Most of them are proper techies. I'm not one of them. At the latest count, we had 5 MBAs in the company, but 6.5 PhDs. Now, I'm assured that half a PhD is a bit more than a master's and still worth having. But we have very deep expertise in building physics and deep expertise in cloud computing and how to leverage that with the smarts of the building physicists. Customers. We have a growing roster of customers. We have some products which are publicly launched, and we have a number of more private products which we make available to corporate customers under our Powered by Sefaira approach. So we have some large customers who are global architecture and engineering practices, but we also have some quite small clients, but to us they're very, very important because they're real thought leaders. So the Z Factory in the UK built the iconic bed factory development quite some time ago. William McDonough in the US, his practice is one of our partners. He co-authored the Cradle to Cradle book, which has been so influential in much debate about sustainability. And we also have Project Frog, who are very cutting-edge practice on the west coast of the States. And they've been very helpful for us in understanding some of their issues. And finally, we raised a fairly large Series A round earlier this year, which I think now qualifies us for being post the startup phase, but we understand the pains involved in getting past that stage. So why do we think data-driven design is important? This curve shows the decrease that we need in carbon intensity in buildings and just how difficult it is to get there. And there are really 3 phases to this. Phase 1 are the low-hanging fruit, behavioural change, metering in the first place, a surprising amount of energy usage isn't metered, and starting the process of transparency. The second phase is really one of comparison. So we have an increasing rollout of energy certificates in the domestic market, less so in the corporate market, but that's been rolled out as a sort of first base must-have. And an increasing knowledge and acceptance of differing standards, BREEAM being fairly influential in Europe, LEED in the US, but there's increasing knowledge and understanding. I don't know whether this particular building is BREEAM outstanding, it's probably BREEAM very good, but this is driving a desire to be seen to be green and to know how to do it. But what we're looking at is how to get to zero carbon buildings. Now, you might ask, why do we bother? It's a lot of hassle. Why don't we just start with the low-hanging fruit? But the cycle in buildings has a very long life cycle. It has 30, 40 years. The impact is enormous. Built environment is already the biggest contributor in terms of emissions. So we think we need to start getting down to building zero carbon buildings soon and fast. You'll hear from startups who are working in this behavioural change area, and that's very important as well. You will hear from people like Ventive later who are looking at very passive house solutions, and the passive house philosophy is a very long way down this curve. But what's difficult about getting to zero carbon design? Well, very, very low carbon buildings are highly tuned, quite complex, quite unstable, and they need to be designed holistically. They're more than the sum of their parts by a very large measure, and you need to have a quite sophisticated approach to design. Now, what is it about IT technology which is coinciding with this trend? There's been a generational shift from 2D design to 3D design. That's very well embedded. We're now looking at n-dimensional design. So this is adding a lot of metadata. The BIM protocols, Building Information Management, is allowing us to add a lot of information to products so that we can see how they act on an integrated basis. But you need to ride the well-recognised software trend now towards big data and ways of manipulating that data. And also the industry itself now needs collaboration and needs to have information available on site, not just in the office. So we think that cloud computing is a crucial part of enabling this. I was trying to avoid the word paradigm shift, but I will use it because that's what it is. So what are we doing with our cloud-based platform? We have a publicly available product which looks at early stage design. And we started with conceptual design because that's where the changes in building codes, building regulations, and client desire for zero carbon buildings has been most influential. So that's where we started. We're looking at the retrofit market. So our contribution to the domestic retrofit market within, for example, the evolving Green Deal framework is to look at the in-house assessment piece. So for us, the crucial bit is making the most of the assessor's time when they are face-to-face with a homeowner who's making a fairly expensive, complicated decision that they're not very comfortable with, they may not understand. You need to actually give them some answers there and then. And we developed an iPad tablet that uses all of the mechanics on the cloud to do some real-time calculation so that the assessor can actually spend time talking face-to-face, explaining, and actually having results to talk about in situ. The non-domestic retrofit market has different challenges, and the challenge there is all around making the business case. Depending on who you talk to, I think there's a consensus that there is money for greening up the built environment. There are plenty of buildings which need doing. There's a fair amount of desire. The issue is around making the business case and optimising the use of the capital that's available. So we're developing tools to pinpoint the right kind of buildings and help with some of the initial assessments of where to make investments. And then finally, we're developing platforms for materials. And there's a huge amount of innovation in this field, but there's some very, very innovative products which need to be looked at in the context of the building. So, for example, phase change material, the impact that that has moving up through different temperature levels is quite sophisticated. If you look at, there are some very innovative glazing products where the glass itself will heat the room. You have shading systems which will adjust with the daylight outside of the building. They need to be modelled in a context. So we're developing platforms which help manufacturers demonstrate what the energy benefits are of their products so that they can get specified, really. That's their requirement. And at the moment, these are under our Powered by Sefaira model available to large manufacturers. But eventually, we hope that this will all come together as an ecosystem. And one of the key things about the cloud is that you can create a range of applications off a common platform that can talk to each other so that they can be used in a way that enables this decision making right the way through this ecosystem so that we can move down to zero carbon buildings as soon as possible. So I hope that's given you a view of why we think cloud computing is crucial in data-driven design, and why data-driven design is one of the essential components, along with having the right kind of materials, having the right kind of financing, and having the right kind of know-how in the industry to get down to zero carbon buildings as soon as possible.
Thanks very much. My name's Rob, CEO, Managing Director of Ventiv. I'm here today to get you a little bit excited or interested in ventilation in the built environment, the passive model. Just before I get started, want to let you know a little bit about our management team. We've got Tom, who couldn't make it here today, an excitable Polish innovator, inventor of the year, and yeah, very highly regarded within the industry, with many awards to his name. Andrew Oldfield is our strategy investment director, who is head of Cleantech for Mercia, and is again very influential within the sector. I've got a reasonable experience within the retrofit arena and construction. I've been working in it for about 9 years now, delivering carbon funding to market, and also retrofitting and building new buildings. We've also got a well-established, high-profile non-exec chairman who's just engaged with us, and yeah, we're very happy to be getting him on board hopefully next week. So I can't talk of any names yet, but if anyone wants to ask, I'll speak later. So getting straight to the problem, in the UK we have a number of buildings which have historically been leaky wind-wise, and we've had some issues thermally insulating those buildings. After you do tighten up a building, so once you get rid of the drafts that the Victorians left us with, thanks very much, we see increase in condensation, damp, mold growth, dust mites, which look like aliens, and volatile organic compounds, which are released from most of the plastics in and around our homes. So there are huge internal air quality issues surrounding tightening up the fabric of the built environment. The solution, clearly, to this is one of ventilation. And there are a couple of options that you can insulate a building, ventilate a building with. You can open the windows. You can introduce something called passive stack. Neither of these retain any heat within the building. You can also fit trickle vents. You can install an extract fan, which uses power, but again, loses heat from the property. You can install a mechanical ventilation heat recovery unit, which uses power, but does recover heat from the exhaust air to create fresh air flow into the building. They have their own issues. We're not going to concentrate on that today, but Ventiv occupies a space within the industry which we've named passive ventilation with heat recovery. And I know that Sarah's obviously had some experience of that in the past. So there is a huge market out there. We have spent billions of pounds in the UK. Over the last 15 years, we've probably spent over £6 billion worth of retrofit funding alone in the public and private sector. This has seen us clad a huge number of buildings, and as such, we have huge issues to come from internal air quality. Ventiv is a modular system which is easily retrofittable into existing building stock. Not only is it a cassette function that slips neatly into existing chimneys within Victorian properties in the UK, traditionally the hardest to treat properties as well, and going to be the focus of ongoing energy retrofits in the future, especially under Eco and the Green Deal. Ventiv is installed very quickly, within half a day or maybe 1 hour for just one unit to go in. You see it creates a flow of air through the individual units, through individual rooms, and creates a balanced atmosphere and maintains ambient temperature and pressures inside. The system, as I said, was modular. It's fitted down through the existing chimney channel, and as you can see, capped with an innovative cowl at the top. It retains heat by exchanging the heat across the boundary layer within the chimney. That's it for the technical stuff. The market itself is enormous. As I said, we've spent a lot of money historically on it. We're going to spend even more money starting from January next year. The new build market alone, we're looking to target about 200,000 properties in the UK per annum, and also we're looking to retrofit a huge number again. I think the jury's out on how that's going to work in terms of the numbers that are delivered, but estimations are around 500,000 per year. So again, we've got a huge race to the finish line of 2050, where we have to reduce our energy usage or carbon emission by 80%. Both of these markets are underpinned by legislation. You've got the Code for Sustainable Homes and Building Regulations, which are keen on introducing ventilation, obviously as part of the retrofit model, but also to enable, to say, closer links between thermal efficiency of the building, and fresh air and internal air quality within the property. The retrofit market is underpinned by two funding streams, the Green Deal and Eco. Eco is more certain of the two currently, and that's representing about £1.3 billion worth of utility company injection per annum into the market. So as you can see, there's quite a call for ventilation within the space. Ventive as a company is right down here at the moment. We're going through our first round, which is fun. We have a huge roadmap ahead of us. Our expansion sees us clear through 2014 into European and US markets, and making the progression steadily with funding through to the commercial model as well. So these are the markets that we're looking to capture. Today we're here looking for investment. As I said, we're midway through our first round, and we see a very attractive immediate market within the retrofit space, within the new build space. UK alone, it's enormous, and we're very excited to be here today telling you all about it. Any questions?
Hey Rob, less on the business model, just wondering how many, it looks pretty straightforward, the technology, at least from the point of view of an aerospace engineer. So how many units have you installed yet, and what's sort of the unit cost or installation cost? Any figures? At
the moment we're securing trials and pilots. It is new technology, so we're trying to establish traction within the marketplace at the moment. We have a couple on trial in various locations, and we're running a test facility for the BRE currently as well through our test facility in Old Isleworth. The unit cost for a house is comparable to mechanical ventilation with heat recovery, because that's our main market competition at the moment, and we feel very well placed to actually push on lower than their price point, probably to come in line with PIV in the not too distant future.
How much does such a system cost?
Around £3,500 to £4,500 per home, and again we're looking to come in line with lower cost units in the future when we can afford to, on the reducing manufacturing costs which are based in the UK at the moment, and forever we think.
I'm here speaking for EnergyDeck, a web platform that's working to enable organizations to save costs and natural resources. And the tagline is, we aim to become the Google of energy efficiency. And then what would have followed is that I've actually worked for Google in energy efficiency for a few years. So people normally rotate their eyes and say, there's a next Google for something, a Facebook for something. So we're taking a good step at that. The other thing is, in terms of experience, I've also been part of a rather ill-fated effort of Google called Power Meter to scale energy efficiency into the consumer space, and hopefully have learned a few lessons from that. So I'm very happy that Sarah didn't show that same slide. I was a bit worried that we would repeat this information, this data. But basically what we're looking at is, as well here, the built environment. And the reason for this is that, as we've heard before as well, but here's the numbers. So 40% of total energy in developed markets is consumed in the built environment. Of course, buildings aren't responsible for that. It's users and organizations. And so we're working with organizations in that space. 10 to 30% of that consumption is typically wasted. And I can confirm that from my previous experience. Even in modern buildings recently commissioned, we could still get 10, 20% efficiency savings with pretty good payback. And 80% of today's buildings will exist in 2050. So there's really a strong need to look at the retrofit opportunities here. Until yesterday night, I would have said, okay, we divide the market. We take 80%, you take 20% for the new build. And it's interesting to see that you're working in the retrofit as well, and I'm going to explain how that differs. So what does EnergyDeck do? Basically, we're providing three. That's a bit loud, isn't it? Basically, we're providing three levels, so three main elements of our tool. You can see them there. It's tracking, project database, and the supplier marketplace. On the tracking part, what you see there is basically we offer web platform, software as a service, cloud hosted, and we've got a freemium business model, which is a big differentiator right now. I honestly think that part of the platform will be commoditized over time, and you will see more and more powerful platforms offering services for a low cost. What we do is a full organizational footprint, so not just electricity, gas, but also waste, travel, transportation, and we do analytics and reporting of that. We also have quite deep technical capabilities to talk to smart meters, building management systems, and so on. What's really interesting here, though, is the part 2 and 3, which is where it starts becoming interesting. And coming from Google, this is all about scale and how do you reach a very broad number of users in a hopefully smart way. So project databases, basically we're building up a database of energy savings measures or resource conservation measures in general. Not so much from a simulation point of view, though there will be some part of project validation and there are some approaches for that, but more from a crowdsourcing point of view. So building this up, and then in order to share it back with the users in an anonymized way, but relevant. And thirdly, when you combine this with the supplier marketplace, it was a somewhat relevant question before, you have a full circle offering, and you also have another way to scale it beyond that. What does EnergyDeck look like? We're probably one of the, if not the most transparent provider of that sort of software in the market because it's free. You can just sign up directly. You don't need to call us for a demo or something. These are some of the screenshots of the actual screens you will be seeing. So top left, this is just a general dashboard. You see your building, you see a benchmark, you see your total energy consumption. You can go down to sort of really sub-meter, smart meter level. You see a building management tool on the right, benchmarks, and then our projects database. But as I said, you can try it out for yourself. The markets we're after with this are essentially two markets, or market opportunities. One is on the enterprise carbon accounting, ECA software space. You can see the numbers there, it grows quite handsomely. And I think probably per unit revenues will come down, but it'll scale to a broader market. But really the big market here is the big opportunity is the energy efficiency products and services space, which is more than the order of magnitude above that. Obviously not all of that is addressable for someone in our position. You would have an affiliate fee, but it's still a very important market that you can then leverage if you make the connection between those three elements. How are we positioning ourselves to actually go after this market? So I think once you've looked at the platform and how we're going out into the market, so we're basically focusing on medium-sized operations. You will get an idea of what type of operations in a minute. And we're going after them with supplier relationship, with supplier partnerships, distribution partnerships. And in that space we have, you can see a few examples there, basically mid-tier smart meter operators who've got a lot of data, they've got a lot of users, but no real good tool to manage those users and to offer additional services to them. Energy brokers, suppliers, again, probably not quite at the point where we want to talk or we're ready to talk to the big six, but sort of the 1-2 levels below that. And also we have an interesting partnership with the Forum for the Future, which I'm going to talk a little bit more about. We still look at larger operations, international operations, more in a selective way. And of course, there's always the free version which people can sign up to. Over time, we'd like to be able to move further onto the right, towards the right over the next few years, but it's going to take a real step change in how we, as a society or as an industry, provide information to users. Maybe also on the regulatory side, we need more changes in order to really scale into this segment. This is, gives you a sort of flavor of the sort of companies we're working with right now and the sort of potential target customer characteristics. So on the left-hand side, you can see, so these are mostly pilots, just to make sure. On the left-hand side, you can see sort of corporate sector who we're working with in order to set them up, multi-site operators there. Mostly starting out. Public sector, obviously this sort of tool lends itself very well to the public sector. Imagine your local authority, you want to get your schools more energy efficient, share data among the schools, get them involved and so on. And the real estate management space. We have a partnership with the Forum for the Future. We're powering their West of England Carbon Challenge, which is a carbon reduction program in the city of Bristol. And those companies you see there are all now in EnergyDeck on the free version. So they have a special version through that partnership. And the objective is in the near-term future to expand that in Bristol and then beyond, hopefully as well. This is the team you've heard about. Myself touched a lot of areas from, I've run energy efficiency within Google's European operations, actually looked at this globally as well, worked in renewables, worked in policy, worked in power meter, worked on large-scale user campaigns. My CTO is someone who's very strong on the information architecture side, also with scalable systems in large-scale organizations. We've got a very, very powerful, if small, still development team, and advisors in the energy efficiency and built environment space. And that's it from me. Thank you very much.
And my question for you is, are you raising money? If yes, how much?
I almost forgot. Jeez. So we're raising money. Be very happy to talk to Generation and about the stake in our company, but it probably wouldn't qualify just yet. So we're raising money, really seed funding, to the tune of about 250, 300k pound for the next 12, 18 months and taking it to the next level.
So you really run a lean startup?
Yes.
Great.
At the time, nothing like this was available. And then the big question was, once we had done sort of our internal audits, we're thinking, how can we scale this to all the offices, and then how can we scale it beyond Google's operations? So you could say that the seed was definitely planted in that time for a tool like this.
But you have taken it far already, and good luck for the next step.
Thank you.
Any business angel in the house, and talk to Benjamin afterwards. I think that could be your cup of tea.
Okay, this is the real challenge. We're all used to getting our energy, and wouldn't it be great? The real thing is that if it's where we want it to be, at the right price, in the right quantities, in the sort of environment that we have, in the structures that we have, the infrastructure that's available today, renewable energy, CO2 neutral. But unfortunately, that's not the case. Energy and renewable energy often comes in inconvenient places and at inconvenient times, and also in quantities that probably we didn't order. So it's to marry this is the issue. Why I'm going to this, in relation to SolarFuel, is just to explain that electricity, you either use it or you lose it. And that's really the situation. We all know that. And to an audience like this, you're very much aware of that. But how do we do that? We've heard about the smart grid, the smart meter. We've heard about the supergrid. And all of these are a patchwork of technology that are trying to solve the problem, how do we store energy? In this part of the world, I think that you would have to say that most of our renewable energy comes from wind. So the issue is, how do we get that wind into a source that we can store? I'd like to show you the SolarFuel to gas technology. This was developed by the Fraunhofer Institute over the last couple of years. And the first pilot plant that was designed to take electricity and turn it into gas. You say, well, how can you do that sort of thing? But it's pretty simple, really. The whole idea was to have a very dense energy source. As you can see, if I can just look at the graph here, I know it looks complicated, but in fact it's quite a simple process. The electricity from the wind or from solar power is brought to an electrolyzer where the hydrogen from the electrolyzer is released. This is then combined with carbon, which is obtained from naturally occurring CO2, and it makes a synthetic gas. The synthetic gas is CH4, which is, as we all know, is methane. Why would you want to do this? Methane is probably 3 times denser in energy than hydrogen. And methane is the sort of a gas that we have in our gas network. So it's pretty easy to take a methane gas and distribute it through the gas network, which is all over Europe. So it's a very, very simple process. Let me just say that one of the biggest problems that we have in relation to energy use and energy storage is the fact that most energy storage systems will probably only store a couple of hours of energy. Using gas, it's almost like an infinite storage system by putting it into the gas grid. You can have months of storage. Particularly, for example, you see on this graph here, it says that there's 200 terawatts of storage. In fact, there are weeks and weeks, probably months of storage that you can have. Whereas in pumped hydropower, for example, maybe 10 hours to two days at the most would be possible. So this is revolutionary in the sense that it means that long-term mobility, for example, you can take this methane and use it as, to generate electricity again, or to use it to generate heat, or to use it to generate transport mobility. And it's CO2 neutral, which is very important. Where do we get this energy from? Recently there's been a paper produced showing that there's at least 250 terawatts of wind in the world, and if we were to actually just gain all our energy from wind, we only need 15 terawatts. So there's plenty of wind energy. In this part of the world where we live, most of the energy is off the west coast, as you can see, to Scotland and to the west coast of Ireland. The amount of energy assessed nowadays is probably about 140 gigawatts. It's enough to run the energy requirements of the UK. This is not a theoretical possibility. This has already happened. In January of next year, the Audi company is one of the first to use the power-to-gas technology, is producing cars that will be using this carbon-neutral, CO2-neutral gas, and the gas will be produced in our power-to-gas plant, and will be used in Germany. So these cars will be launched in January of this year. I hope that there will be many more. The first 1,500 will be coming off in 2013. Thank you for listening to me. I hope that...
What's the loss of energy between the point at which the electricity is initially produced from the wind power to the point at which it's released at the point at which you ignite the gas?
There's always a loss of power, a loss of energy when you convert anything from one form of energy to another. And in this case, you're talking about conversion of two different conversions. A conversion from electricity in the first place to electrolysis. Probably the loss there can be up to 15-20%. You get another loss of probably 15%, 20% again when it's used the reaction, the catalytic reaction, to change that to methane. So you're talking about an efficiency rate of maybe 55 to 60% in total. You might get a slightly higher efficiency rate if you used some of the heat that's involved in the process in another operation. But that's not really the question that I would like to answer. The situation is that in the case of wind power, we can have as much as we like of it, but how do we actually transport it from where I said, say the west coast of Scotland, to this part of the world? There will be congestion if that was the case, if it all had to come from there. You have to have storage. There's no such thing as a production system that wouldn't have a modicum of storage. So the important issue here is to be able to store that energy. And the only way, therefore, you could have masses of energy coming from, say, a storm system. If you could store some of that energy, which you're not going to use at that particular stage, that's the issue. That's the real unique point about this. Because at that stage, that energy is actually free. You wouldn't be able to use it unless you could store it. I hope that answers it.
I heard a few times now about the idea of, forget about the smart grid. We have the gas grid, and that's so much better than anything you can do with electricity. And it does feel so, actually. So why are people only starting to talk about this now?
The process of methanization or methanation has been around since 1912. It's called the Sabatier process. It was invented by a French chemist. So it's a very old process. It also was a Nobel Prize winner chemist as well. So I'm maybe digressing a little bit. But the reason people haven't been talking about it is because it hasn't really, in the sense of looking at all the different possibilities that we have. As I said, there's a patchwork of technologies that we're using to try and sort this out. But the idea of using gas is, in the last couple of years, gas is being used to drive cars. It was also fairly popular in the 70s and 80s, but it fell out of favour simply because it wasn't worth it to have two different tanks in a car. You'd have a petrol tank or diesel tank and a gas tank, and you'd wear out your back tyres with the weight of energy that you were carrying around. So it wasn't really very popular. it just went out of favour. But because of the situation today, methane gas is very dense. I said that at the very beginning of my discussion. And because it's dense, it's almost as dense as petrol. So you can carry quite a lot of energy with you in the car. So therefore, that's long-term or long-range mobility. We've been talking about the electric vehicles. That really is short-range mobility. But if you're to travel from, say, London to Birmingham, there's a thing called range anxiety, which you've heard about. It wouldn't happen with a gas-powered, CO2-neutral car. That's one of the reasons why it's becoming more popular, or the idea is becoming popular now. And Audi see this as part of their e-balance, as part of their balanced mobility, and are really serious about putting it together. The wind is there, the energy is there, and it is a CO2-neutral energy, which is very important.
I really like the idea. Sounds really neat, and in particular the fact that you're using potentially a distressed supply of, as you say, energy. If it's intermittent and it's not matched to load, it's going to waste. But the nub of it, my question is, what is your end cost of gas per unit of gas? So do you have a pilot project up today? Do you have cost forecasts for the MSCUF or MMBTU price per unit of gas? Because that's essentially what you're selling at the end of your unit. I
think that in relation to renewable energy, it will never be the same price as fossil fuels. So the question is, it's dearer. How much dearer? It depends on the process. If you're going to lose 40% of the energy in the process, it is costing. But I think the issue more is to do with what do we do with the vast amount of energy that's going to waste at the moment. It is free if we can collect it. The cost at the moment would be around, say for example, we're getting Russian gas at 4 cents a therm. This is probably around 18 cents a therm, so it seems like who's going to buy that? But remember, we're also talking about greenhouse gas emissions, which are lowered. It's completely carbon neutral. Where do you get the CO2 from? The CO2 can be obtained from, say, anaerobic digestion facilities, and that means that we're not adding CO2 to the atmosphere. So there are actually, you have to look at the other possibilities. I know that I think the question was asked, will consumers actually buy these things? But yes, they do. I mean, we are becoming more and more responsible, and we have to think about our children, and we have to think about what sort of energy systems we will have in the future. It may cost us more money to do this sort of thing, but I think, you know, we would all have to agree that it will be worth it. That is sustainable development.
So I would like to come back to one point that Niki said in the beginning about Toyota winning the market, especially in the US. What Jan and I could see last week was fascinating. We came out of a club in Boston, Massachusetts, and I was standing there smoking a cigarette, which is not really CO2 neutral, but cut that out, please. And suddenly 8 cars moved and no sound. And I was like, whoa. You immediately realize something's wrong. And then I was going to one of these, those were 8 taxis. So I was going to one of these taxis and I was asking, okay, we have taxis in Berlin that are hybrids, but what's going on here? I mean, you can't tell me that everybody's driving a hybrid here. And this guy told me, well, it was put in by the Boston legal policy. It's a policy. You have to take at least hybrid taxi. And the only one who's offering hybrid taxis in Boston is Toyota. So you see a massive amount of Toyotas. You're being like struck almost by cars, at least you feel like it, and then you realize you start hearing them because you pay more attention to it. Like every 10th car is there a Toyota hybrid. It's either like they have, I forgot the names of the models, but they have 2 models there, and pretty much the whole cars are only stuffed with these cars. And I was asking this taxi driver, are you happy with this? Are you happy? And he was like, no, we hated it in the beginning, and now we all love it, and people buy it for like out of their own case, privately also, because they realize they save money when they drive a lot. So what else can people do when they drive a lot or don't drive a lot? When they drive a lot, they can buy hybrid cars. When they don't drive a lot, they can use Carzapp. So what does Carzapp do? We connect people that own cars with people that don't own cars but want to drive a car from time to time. We call it private car sharing. You could consider it as Airbnb for cars, pretty much. So
imagine you were here with your car. I don't know if you are. It's pretty crazy in London, as I found out today. But you could earn, let's say, 20, 30 pounds right now by doing nothing with your car. That's what we do. So what else is the problem of our customers? Well, on the one side, we have the car owners. So if you own a car that's standing out here, you know about parking tickets that you have to pay, the repair costs, fuel prices, we've been talking about that. I don't need to know what all problems you get, insurance, policy, paperwork, whatever, with your car. And what do people have as a problem when they don't have a car? Well, if you want to go do grocery shopping, if you want to go to the airport, pick somebody up, if you want to just get into an appointment quickly and get back later on, you might need a car from time to time, maybe if you're not in downtown London. So now the problems are there, but what's the solution to it? Well, the solution is Carzapp. As I said, we connect car owners and car drivers. And what do we have? We have a technology that we built and install into the cars, which is developed in-house. And what does it do? Well, what it does, it enables everybody who's allowed to drive this car for a certain amount of time to open that car with a smartphone during this time. So you just approach a car from somebody else, open it after you've made a reservation. We check whether you are allowed to open it, and then if yes, the car opens. An immobilizer, which is there for security reasons, is deactivated, and you can just use it as your own car. Bring it back later on. Everything, I mean, I don't have to explain you how PayPal and online payments work. So this is all covered. We have an insurance solution, so it's safe for the car driver and for the car owner. If something happens during the rental period, everything's covered. The car owner gets a replacement car for the time that's his car is repaired. And I'll get a little more into the technical details in a minute. So what about the renter of the car? Well, of course, as I said, he's insured. And the biggest advantage probably is you get access to a car without needing to own one. It's pretty clear. So why don't you go to Zipcar, which, yeah, I know, Carzapp, Zipcar. We didn't think about it at that point of time when we came up with the name. It was more about zapping from one car to another. That's the advantage. You have the model diversity. So you can get the car type, car model at that time whenever you need it, where you need it, and how you need it. And you see the price up front, and you have a clear structure of prices. You see how much you're going to pay. It's not like a car where you find out at the end of the year how much it really costs you. And in terms of, where's the Cleantech part now? Well, in terms of the Cleantech part is you have to know that shared vehicles, one shared vehicle replaces around about 4 to 8 vehicles on the street in the medium run. So we will save a lot of resources. Building a car consumes up to 30% of the CO2. At the moment, it's getting tendentially higher because techniques to get the fuel consumption down are consuming more and more CO2 and shifting it to the production, which is not covered by statistics that are out in the market. So the waste of resources is huge for producing a car, so to produce less cars makes a lot of sense in my eyes. To close it up, the Zap Kit, what is it doing? That's the hardware that I was talking about, so I'll do it shortly to stick in the 5 minutes. As I said, you can hand over the car without needing to meet and hand over the keys. When you're on holidays, it's not so cool to meet somebody to give them the key. The immobilizer attached to it, because we have a spare key in the glove box that the renter takes to start the car, is needed. That's why we have the immobilizer, to make it safe. If somebody tries to steal the car, we get a silent alarm in our server and can inform the police immediately. Furthermore, we have an accident tracking system. So if I bring back someone's car here in the room at 2 p.m., he comes to his car, or she, at 8 p.m. and finds a new dent or a new scratch, we can handle that issue without being in trouble. So they don't have to discuss, like, when did it happen? We can just say, in that case, when it happened. I don't want to go too much into details, just to do the real close-up. I'm shortly talking on my really last slide about an electric mobility project that we have. So we believe that private car sharing makes a lot of sense in terms of electric mobility. So if we need whatever style of electric cars, whether they are green gas cars or especially short-range cars like battery electric vehicles or hybrid electric vehicles that are out in the market, also are not so running so far in electricity. We need sharing concepts in cities, and it doesn't make sense to just put more cars on the street, more electric cars to share them. So we want to encourage people that think about buying a new car to buy one that's electric. And in this project, people get a refund from the government for buying this car. Not directly, but yeah, I'll be happy to explain you more in detail how this works, because this would really push the time out now. So Jan, thanks very much for the invitation here, and I'm happy to talk to people that are interested in this concept. We're going to start at the end of this year in Berlin. We've raised first round, business angel round, pretty small. Now we're looking to enter the market in Berlin-Brandenburg and go nationwide in Germany next year. So we're looking for €1 million as a seed investment right now.
But we still have a moment for 1 or 2 questions for Oliver. Sean.
Price-wise, how does it compare with Zipcar, for example, in terms of the price?
Yes, so the price is lower. That's the advantage. Now you can ask yourself, why is it lower? As I said, we don't, or the car owner, which is finally the offer person that offers the car towards Zipcar, offering the car, has to give a lower price. Now, the car owner, what is his goal? His goal is to reduce cost of the car. What is Zipcar's goal? Is to get the cost of the car plus a decent profit for the shareholders of the company. And the car has no other value than being driven by car sharing organizations. So a private person is earning enough and decent money, up to 1,000 euros we've seen so far, with their cars when they rent it out, and they're tendentially putting it in a lower price because they know that they're in England, for example, with Zipcar in competition. In Germany, there's something comparable to Zipcar, which is Lünstedt. So they know about the competition and they're willing to put it at a lower price, because you think not really like Zipcar, like the profit rate that you make on your car. You think more like, okay, if I wasn't here for 2 weeks and when I'm coming back, I have 300 more euros, makes sense, because somebody rented it 1 week and 10 other people rented it for 3 hours, it doesn't really matter to you, then you just have 300 more euros without anything. So it's not really a rational kind of thing. It's more that people think in terms of cost instead of profit.
2 questions. What is the barrier to entry? And second question, once a car owner has been put in relation with a car renter, why does he have to go through Carzapp?
The first question was, sorry, just again, the barrier to entry. Okay, so our market entry barrier is pretty much finding people that are willing to share their cars with others, that have a certain attitude towards their car. It's not like their second wife or their hobby or whatever you hear when people say, no, I'm not gonna do it. So there's quite a huge amount of people that say, no, I'm not gonna do it. On the other side, if you want, we are then in a niche area of people that see it more as an asset instead of a hobby or whatever. And this niche is so big. There are studies out there talking about 10% up to 40% of people that would share their cars, depending on whether it's their choice, who can share it, and 40% if people say, okay, I can define who's sharing it. This is of an insurance company that has made the study. So these niches with 40 million cars in Germany are big enough for us to be more than profitable with our business plan. Next point, there are certain more points like installation of the hardware. Would people like the hardware installed? Do they trust other people and the insurance? And of course, communication of this whole project is really a barrier for us. Now, why do people, second question was, why don't people go around Carzapp? The first thing, you cannot go to another platform afterwards because you have our hardware installed. You're not going to get a second hardware installed. That doesn't really make sense. So we have a lock-in effect on the cars. And if you decide you have 3 or 4 people that want to share the car and they're regularly coming back, of course, you can do it without us. But in that case, they're not insured. So if they do an accident, because you're earning money with it, it's not only, you could put them in your insurance policy and say, hey, hi insurance, it's not only me who's driving, it's also person 2, 3, 4, and 5, or everybody, but still you're earning money with it. So your insurance, if anything happens, won't pay. So it doesn't really make sense.
So this is Jan speaking again with the final pitch. I want to tell you what is the Smart Green Business Network about. And basically we are a startup company at the intersection of Cleantech, internet, marketing, and event. And our mission is to accelerate smart green innovation. And how do we do it? We connect the people and the companies making business, yeah, especially the triangle startups, investors and corporates, and all the service providers, suppliers around them. We are two guys, besides me, it's Thomas Butter, the best coder that I know, and we are currently developing our new platform called Ecosummit Market, and we are looking just for €1 million. So we started in 2010 with content, publishing, blogging, Ecosummit TV, and our conference series. We did 3 successful events in Germany. We are about to do the 4th one. And now we think connecting in real life is nice, or even offline, like tonight. But if we could do it online 24/7, it should be a lot more effective and efficient. And that's why we are currently developing Ecosummit Market, and we plan to launch it in November in Düsseldorf. I believe every startup has especially 4 success factors they have to execute: people, product, capital, and customers. And for all of those, they need ways to generate leads. Yeah, you want to have an application from smart people, you want to have applications from smart investors, not the other way around if you're really good. And you want to find customers and suppliers and partners, and it's all about lead generation. So we actually want to generate leads for the members who create company profiles on our platform. How would such a company profile look like? This is one example. It's a wireframe. Just to give you an idea, there's a company that we know quite well from Germany called Entelios, offering a demand response solution, quite powerful, shifting the behavior of the energy users in order to save money for the providers. And this company can create a profile in the right place where the right people are. And there, if anybody wants to contact this company, we generate a lead and we pass it on to that company. And they're actually responsible for their own content. It's 100% self-service. They have to edit this profile and they have to keep it fresh, and they are also deciding what they want to make public and what they want to keep private. We also have a freemium business model. Benjamin is not the only one, and I think it's a good idea. We are running up a little bit against Cleantech Group. They have a market intelligence platform called i3. It costs $5,000 as an annual license fee for the first user. Second user, I think they charge half of it, $2,500. And we want to make it free because we are not employing a large group of analysts creating content, but we invite the companies to show off who they are and what they offer and what they look for. And then, of course, if you want to get more traffic, you can do some promotion inside the system, similar to promoting inside Facebook. We actually want to become LinkedIn for Cleantech, but with a heavier focus on the company profiles. Once we have done all this, what else could we do? Yeah, I think helping a little bit the early stage people in the room, because there's a huge gap before the late stage people jump in. Niki, I'm looking at you. And I think the idea is raising a fund from the people who then benefit if they get better startups coming up the deal flow pipeline. So we need to do something in the very early stage, and the very fashionable word is called the accelerator. And why do we think we can do it? Because we know all these VCs, we know all these startups and corporate VCs too, and we also have a mentoring program which we already start on Ecosummit Market. Yeah, if anybody of you wants to be a mentor, which means a pro bono advisor, then you can say on your profile that I'm ready to help startups a little bit of spare time, because I believe in giving and taking in order to help people who really need the most help. And then by this, Ecosummit Accelerator and Ecosummit Market have a dual positioning. One is across the entire life cycle of the startup. That is our business network and Ecosummit Market. And then the accelerator trying to invest a little bit at a fair valuation at an early stage. And we believe we are quite well positioned and qualified to to do an Ecosummit market because we already have support from big companies and small companies. Sefaira has been a supporter, and Fabienne, Ecomobilité Ventures in the past, and new big companies are coming into the game. Evonik and Lanxess, two big German chemical companies that are just starting their own corporate VC initiatives, and many people believe that the corporate VC is probably playing a role that other VCs don't like to play because they have this strategic interest and they have the technical expertise to reduce the technology risk a little bit more quickly and probably cost efficiently. And quite a number of VCs have come to our conferences in the past, so the network is basically established, and now we just need to work harder together. So here are some KPIs. You can see we are still a startup. We did 3 events between 225 and 300 participants. We are online. We are on YouTube. We have our Ecosummit channel called Ecosummit TV. Now actually 36,000 video views, and we are active on Twitter and Facebook. And I think this is really very important to do good online marketing. Some of you startups have 300 followers on Twitter, but Ventive only has, I think, 11. Yeah, maybe you get 1 or 2 more tonight. But it's the right way to get started, because this online marketing, digital marketing is really very important, and many people in the Cleantech business are probably relying too much on their technology and not enough on marketing. And that's where we are now, and that's where we are going to be in November. And this is my last slide. I thank you very much for joining us tonight, and now I think it's a good moment to have more beer. Thank you for coming to Ecosummit Lounge. All the questions we do over there, okay? Thank you.